All right, let's take a look at how investors have been trading this week. Gemma Dale joining us from nabtrade. Gemma, great to see you again on a Friday. So, of course, Christmas just around the corner. What happens with volumes?
Yeah, it quietens right down at this time of year. We see it every year. It has to be pretty exciting, and there has to be some big news for investors to get really enthusiastic about anything at this time of year. So last year it was quite elevated compared to now. It's really thinned out, and what we see is either something very exciting, news-driven, they'll leap all over that, a price that's under sustained pressure, they might kind of have a nibble at it, or alternatively, our traders who will keep trading all the way through wherever they see the opportunity. Those guys still move quite aggressively regardless of what the market's doing. So long as they can eke out their gains, they're happy. But for the rest of the population who are more investors, those big portfolio shifts don't come so much at this time. What's really interesting is we have started to see far more active trading in January. So we see quite a bit of a January effect of people starting to make decisions, rethinking their portfolios, putting money in the market for the first time. December's not that time. December, everyone sort of, they can go to the pub now. They're doing that.
Mind you, we've seen that volatility just in recent time. Do you think that would be an opportunity for traders at this point?
For a lot of our traders, this is not volatile, right? They saw last year and they're like, I need to see a 10% move. Right. They don't see a 4%
Gee, they've been spoiled
move.
Then, haven't they?
So spoiled, so spoiled. We have a heap of investors, maybe a third of our base, for whom last year's experience was the first really dramatic increase in volatility. Nothing since then is going to touch the sides of that, right? It's not even close to being as interesting. And then prior to that, it was the GFC, which was 13 years before. So, they need something really exciting to happen. This is boring.
All right, well, let's look at one of those the stocks that has been volatile. Fortescue, I know we always talk about it, but it's always at the top of the list there. What's going on right now? And of course, we just had that news today too. Elizabeth Gaines stepping down.
Yeah, so not huge movement in the price today, really. It's all driven off the iron ore price, as you know, and that's why our guys love it. They trade it because they can see what's happened overnight. They can take a very well-educated guess as to what the movement will be in the share price during the day and move accordingly. They're still moving enormous values through it. Like, it's extraordinary how large those trades are. And they've been doing it all year and doing extremely well out of it. It's very mixed trading now, and it's very active trading. So they're moving daily and they're moving large amounts of money. It's still quite a small group of individuals, but they know what they're doing. What is quite interesting is none of the smaller guys are coming through behind them anymore. It's really just down to that core group of active traders in Fortescue. But it's worth noting, Fortescue trades were double the size of the next most traded stock yesterday. It really is dramatically higher than anything else, which is why we have to keep talking about it.
Yeah, okay. All right, let's talk about something else then. In the energy space, Vulcan Energy, in fact, it's just acquired geothermal energy plants, so diversifying to some degree. So that's been popular. Why is that?
Yeah, so big spike yesterday, saw massive trimming. This is
Okay.
interesting to me. It's been clearly a trading stock. Obviously, it's run up so hard. It's up 600%, I think. And so really aggressive run up. Traders were really enjoying it earlier in the year. It was actively traded, thinned out, bit of news, has a spike, people got rid of it. And that's what's most interesting to us. People are not waiting to hold it for 12 months to get a CGT discount or anything like that. They're moving in and out of this kind of stuff. When they see a big spike, they'll let it go. So that one's clearly not a buy and hold for our guys. Anyone who's holding on to it when it has a spike will trim it.
All right, okay. Now, another stock that's been making news this week is Magellan, the funds manager. Turmoil at the top. Still waiting to get the backstory, really, but we've seen the chief executive step down. Bit of other news there as well as a consequence, and also just as far as its performance thus to date, and I guess also looking forward, has been sold down quite heavily.
It's been sold down really heavily. I mean, it's down over 50% over 12 months. It has been in our book for quite a while, not in the top 10 or the top 20, but it's been in the book for a while because a lot of investors were buying it very early on in its sort of listing days. It's up 2,000% since it's listed, right? It's done incredibly well, but been hammered this year because underperformance. Hamish Douglas has been in the news for all the right reasons prior to this year and not the right reasons this year. And investors are very attached to Hamish. They know him very well. He is as high profile as any fund manager could hope to be. So investors are attached to him and attached to the business. We also have a lot of financial planners who recommended the product to their clients. They're recommending the Magellan flagship fund to their clients, but also buying the stock. So riding that both ways, both for their clients and for themselves. Interestingly enough, it's been hurting obviously this year. We've seen a lot of buying in it, really quite aggressive buying, and it's not the kind of stuff we see very frequently. It's obviously been off for a while, and yet we're still seeing buying. People keep coming back to it, partly I think because the news cycle is, the headlines are there, right?
Yeah, well, that's true. All right. Gemma, big banks always popular. What's going on that front?
Yeah, so Westpac is still number one for us. This is a really interesting shift. It was number one back at the beginning of the year when it had not rallied as hard as the other big three out of COVID. It obviously got hit really hard with its annual results. It is still a 90+% buy at the moment, which is amazing. That $21 range, people really, really like it. I think it's been underweight relative to the others in investor portfolios, so they have been picking it up. ANZ seems to be of very little interest. So there's very little interest in ANZ.
Yeah.
Westpac's a huge buy. CBA at $98 has been a massive sell, so it was an 80% sell yesterday. So they're starting to trim that, even though it was well over $100 for a while there. So we're seeing trimming in CBA, buying in Westpac, and NAB's also dropped out of the numbers, which is quite unusual for us.
Yeah, okay, all right. Now also buy now, pay later. What's going on there? Because we have seen some quite massive movements, particularly Zip and Afterpay, which are obviously the favoured ones.
Yeah, so they were huge, as we know, for ages, and then really started to drift away. Once the Square news, the Square deal had been announced, Afterpay, people sold it really aggressively. There was only a core holding left, and people have just not touched it really. They're either hanging on for the transition or they got rid of it. We did see a little bit of buying below $100 last week, so there was a bit of enthusiasm for it. People thinking, do you know what, it's going to come back to that 120 range. We're going to do well out of it. It's still in the numbers around $100, but not very large trade volumes. Zip, on the other hand, it fell away, right? People had been trading it really actively through the first 6 months of this year and then just lost interest completely. Below $5, there was quite a bit of interest, so that was last week and the week before. They're still trading it now. It'll be interesting to see whether that returns as a trading stock where people think that they can eke out gains fairly frequently, or whether they're like, do you know what, I've done my bit with Zip.
Yeah.
I've done well enough, or not, as the case may be.
All right, Gemma, always great to wrap the week with you. Thanks for joining us from nabtrade.
Thanks so much for having me.